Good morning to our panelists. Thank you for joining me today on screen. Craig and I are very appreciative to be joined today by some of our fantastic industry experts, and I'm really looking forward to getting into the debate. We've done some introductions already, so I will just dive straight into the questions. So as we know, the stamp duty deadline in 2021 drove a lot of purchase business, and in 2022, it's been described by the press it's going to be the remortgage year, with expected volumes due to reach up to 90 billion, which is nearly 10% up on last year. So panelists, what opportunities does this present to the intermediaries within the marketplace? Sally, let me come to you first with that one.
Thanks, Eloise. I think there's a huge amount of opportunity this year. People have changed the way they think about their home, and they are, as we've seen already, keen to make it much more usable. Don't necessarily want to move, but can see that if you've got two people working from home part of the week, all of the week, they want to make more of their garden. They probably are even thinking about a holiday home or a holiday. Weddings have been put off for 2 years, might have to be twice the size now because they've had to delay it all. And I think there are so many things that people want to do and will feel this is perhaps the year of the opportunity to do that. And so I do think remortgages will be strong. And we did have certainly a bumper year on purchase, so it does make sense that remortgages will come into play. But it is important from the intermediary point of view to be talking to those customers, because they may have a whole back book of customers that they might not have been visiting on a regular basis, and that's important if you're going to maximize that remortgage opportunity.
Fantastic, thank you, Sally. And over to you now, Paul, as well.
I'd concur with everything that Sally said. A few thoughts from me in addition to it. Well, certainly it does look as if purchase is going to be relatively subdued at the beginning of this year. There was some stats out over the weekend which were pointing towards there being 400,000 properties listed for sale in January 2022 versus 630,000 in January 21. So that's a big drop, and in some parts of the country it's particularly acute. So I'm in the southwest, and I think it was a 46% drop in listings between last year and this year. So that does suggest that purchase can be a bit tougher. But you know, I think it's IMLA that's come out with the the 90 billion pound target in terms of remo opportunities this year, which feels very realistic. I think in terms of the data, it points towards certain peaks during the year. So from memory, it was January, June, September and October for resi, and April and October, I think, for buy-to-let. So there'll be various peaks during the year that advisors ought to look out for. I'd reinforce Sally's piece around keeping in contact. So there was some data that one of the providers shared with me in terms of the number of clients that came back for a PT or remo from the same originating broker, and it's in the region of 50 to 55%. So in other words, the best part of half of clients are finding another route forward 2 years later, 3 years later, 5 years later, whatever it might be. That feels really high. And within the Open Web Partnership, I know I've got some firms that are around that 50% mark. I've also got firms that are at 80% plus. And surprise, surprise, they are the ones that are in constant active dialogue with those clients, whether that be newsletters, whether that be social media posts, whether that be reviewing their GI or their protection on an annual basis. So all I'd encourage advisors out there to one, make sure that you understand your MI, how many of your clients come back to you. Two, keep that dialogue going. And then the final piece is advise. So it's often very easy to just put a client back towards a PT, but unless you've done that full analysis of the client's circumstances, done the fact find again, actually remo may well be a better option, and clearly by doing that, you're doing the right thing for your client, and hopefully identifying other opportunities for remos, or sorry, for general insurance or protection along the way.
Brilliant, thank you, Paul. And Craig, what's your view?
Well, I think a bit of context first is that yes, this year is going to be smaller. We think the market's going to be smaller than last year, but actually this will be the second biggest year since the financial crisis. So if you exclude last year, which was very big for obvious reasons like the stamp duty holiday, etc., the forecast, although this year is going to be smaller, it will be the biggest year apart from last year since the financial crisis. So that's still a really good year. And yes, the market's definitely changed towards remo away from purchase, which I think is both an opportunity and a threat. So brokers, I think absolutely the key thing is customer engagement, because I think some of the lenders will be trying to take those customers direct. Some of the direct lenders will be trying to do remortgages, PTs, etc. So I think showing the added value that a broker can give from a full market outlooks, really important. We're looking desperate to launch our new broker PT portal in the next couple of months for brokers to use, just undergoing some final testing. But yeah, I think the key thing is just stay close to your customers to make sure they have all the options that they possibly can.
Oh, brilliant, thank you for that. And there were a lot of changes that happened in 2021, and one product that we saw emerging from the market was the green mortgage. Now, the green mortgage looks very different from lender to lender, and there's still some way to go before we can meet all of the government's requirements, like the net zero emissions by 2050. But what steps do you think that we can take in the mortgage industry in 2022 towards achieving these goals? Paul, I'll come to you first this time.
That's quite a tough one. I think if we knew the answer to that one, we might be in different roles. But yeah, there is a just massive challenge here. Is it sort of 15–20% of all emissions are coming from UK property?
Yeah.
And that's the challenge that us as the industry have got to address. Clearly, lots of green products out there, and as you said, they vary in terms of either incentivizing ABC, EPC houses to individual lenders, or incentivizing improvements. They're absolutely a step in the right direction, but it feels as if it's early tentative steps, and there is a long way to go. So for anybody who's not aware, my understanding, and Craig, you might know a lot more about this than I do, but my understanding is that the lenders are being asked to analyse their back books, understand exactly what the EPC position is on them, set targets for improving those EPC positions, and then potentially, albeit it doesn't sound as if it's been bottomed out as yet, potentially face financial penalties if those targets aren't met. Now, if all of that comes through, then from a lender perspective, there is absolutely no choice but to address this. So yeah, anybody who so far has ignored green mortgages, these are here to stay, and it will get ever more significant. The easy way forward, I guess, to a degree, would be focusing on new build or recent build, or trying to acquire all those ABC EPC properties out there. And that might work for smaller and newer lenders, but if you're sitting there with a big back book, you've got to face into that challenge of how do you turn around that EPC position on a big back book of properties, and that task of incentivizing clients to make the changes. And these aren't small changes, whether it be an air source or a ground source heat pump, or new double glazing or triple glazing, more and more insulation. It's expensive, and therefore we need to find ways as an industry in terms of being able to support our clients and fund that, whether that be through capital raising remortgages, whether that be through second charges or further advances. So that's our challenge. The COP26 coverage included quite a lot of data from globally around how do people feel about the environmental challenge, and generally everybody around the world is up for it until it costs them money, at which point they have a slightly different view. So our challenge is, how do we provide those, I guess, mechanisms to help fund it? And that's not going to be easy. And there was some more coverage in the press over the weekend around rural properties who are currently not on the grid. and I'd not seen this before, but there's 1.1 million of them who aren't on the grid. From 2026 onwards, you will no longer be able to put a new oil-fired boiler or liquid gas boiler in. It's got to be air source, ground source, hydrogen, whatever the options are. Average cost £12,000 plus. So finding a way to support those rural clients will be a big challenge. But it can't all land on us and the lenders. Yeah, this has got to be a coordinated activity across, government, across builders, across lenders, across surveyors, as well as the manufacturers of all the kit. And we just need that, probably a more integrated strategy than we probably have at the moment.
Brilliant, thank you, Paul. And Sally, what are your thoughts?
I think that we're missing a little bit of a trick in that intermediaries aren't necessarily mentioning the whole climate change and green agenda, because there are green mortgages, yes, but it's the whole context that it's within that I think should be much more prevalent, because I don't think they will bring the subject up because there's not quite enough information for them to talk confidently on Kensington green agenda, on the big lenders green agenda, and everybody has one. Everyone has targets of some sort, and I think the mortgage industry as a whole isn't talking about it out loud to the general public about some of the fantastic things that are being done. And if these targets are met, it's huge. It's a huge amount of work already going on. And it's about green, it's about carbon footprints, it's about sustainability. All of these things are being worked on as we speak. And somehow, as an industry, we need to pull some of this information together in a central kind of format that we can bring to life through our intermediaries and our advisors, so that they can feel confident that when they're talking about 3 or 4 products with 3 or 4 lenders, they can say, just so that you know, all 4 of these lenders supporting the green agenda or climate change or sustainability, and there's certain USPs, and we can look at that or have some kind of snapshot, and it's not that easy, that we can have available so that our brokers can talk about it to a certain extent to engage the client. Because if you ask people if they care and if they want to do something about it, one of the things I can almost say everyone will say yes is if you had 2 mortgage products exactly the same, and one of those lenders was going to plant a tree if you took the mortgage with them and the other wasn't, most people will say, I'll go with the one that plants a tree, because they feel they have actually done something towards climate change, and certainly would be quite happy to tell their friends, actually, I've done something good today. I've chosen a mortgage, which is great, and there's a tree being planted because of it. And it's those kind of things that would engage the customer, because at the end of the day, it's the customer that we've got to encourage to make the right choices and eventually pay for those things that they need to do, that they need to cover within their houses. So I think we need to find a way to make the green information more accessible to advisors so that they can start talking about it with their clients. One of the things I think that perhaps lenders could help with through valuations, to start doing a green review on certain properties that they know would be in that bracket, or that are going to be difficult to get up to the A or B specification. So it could be supported by the valuation. I'm not saying that it would need to be acted on, but it could highlight areas which could become a problem or that needed to be addressed to get that house to maximum efficiency. And that could be something that would start to bring it alive, because people would be starting to think, oh, crikey, I didn't know about that. And certainly we could start with buy-to-let properties, because I would think that a number of landlords are unaware of how much work they might need to do on their portfolio. So at least if we're highlighting, here's the problem, here's where you are with this property, particularly if we're doing some remortgage business, it's something, and I don't know how deep you go in or how much information you do, but it could just be a way of bringing it to life so that people can schedule in. If you've got a number of properties and you've got a bit of a catching up to get them to the A or B energy performance, they're going to have to schedule that into a portfolio of properties. So they need to be thinking about it now. Well, it would be a big help if they knew from any remortgage what that review might need to have done, and maybe they can only do it a bit at a time. So I think there's something there that we could perhaps do that could make the awareness.
It's brilliant, thank you, Sally. And Craig, from the lender's perspective.
Yeah, I mean, I think we need more innovation. The first thing I'd say is, you know, when I've talked to brokers about this, as the same for the wider population, some people really care about the green agenda. Some people think it's all a bit of a con, bored of hearing about it and bored of hearing about COP26 and, you know, seeing energy increase because of green taxes, etc. But I think they need to care because their customers care, because there's no question this is a real burning platform for consumers, and there's loads of research about customers. If they're exactly what Sally said with the tree analogy, if they're presented with two similar products, they'll always pick the greener option. Interesting though, I also agree with Paul, it's easy to say that when you don't have to pay for it. When you have to pay to be green, that's a bit more different. But I think as lenders, we need to be a lot more innovative. There is a lot, I mean, the good news is there's a lot of green mortgages now. We launched ours pretty much exactly 2 years ago, and we were one of the first in the market. Now most lenders have green mortgages, which is brilliant. So I think that's really positive. Personally, I think most of the industry started in the wrong place. I can't really see how giving someone a £500 cash back who's got an A-rated property really helps anything, because the property was already A-rated. You haven't affected any change. I mean, our approach, as you know, is to look at the older properties and help those improve. So give people £1,000 to help make improvements on their EPC rating, because that's where the challenge is. The challenge and the opportunity is in the older properties, and the real danger with some of the consultations that Paul referenced in the market about making lenders have their book look a certain shape of EPCs. The unintended consequences of that is, I mean, potentially, if you took it to its most extreme, and I don't think we'll end up there, but you could end up with people in E, F and Gs who can't get a mortgage. So you end up with, you know, all these back-to-back terraced rows in all cities around the country. Well, they can't get a mortgage, so you get hugely disadvantaged sectors of society, which that can't be right. So I think we need to do much better about helping people improve existing stock, whereas most of the focus so far has been on new build and properties that are already A or B, and that doesn't really help. It's the people in the Victorian terrace which is leaking heat. That's what we need to focus on fixing.
Yeah.
Yeah, brilliant. Thank you, Craig. And I suppose leading on from this, and Sally, you touched on this a little bit in your answer to the previous question, but we've kind of seen the introduction of the government's new EPC requirements for landlords between A and C coming into play over the next few years. So will green mortgages offer this solution for landlords, or will we require a different type of innovation to support the buy-to-let market? And Sally, I'll come back to you on that, as you touched on that previously.
Yes, I think that we've just got to make sure that we get the message out. And I appreciate that there's been quite a bit of press, but I don't think there's been much mention of that 2028 date. And that's not very far away. And I think it was rumoured that new properties might have to confirm by 2025, but I don't know if that has actually been confirmed. So these aren't dates in the long grass. These are dates that are not that far away, and that's why I think evaluation is one thing, and it will, you know, you would obviously get that EPC certificate when, especially when you're buying a property. But I think it's all the knowledge around what they mean, what it means, and I think it was mentioned previously. These heat pumps, they're not cheap. They're quite expensive, and it's not just that. You've got to make sure that the entire property is insulated, so that you've got, and there's no gaps. Everything's got to be tight for these air pumps to work. And it's a whole new, there will be people that will be going to replace their boiler and being shocked that they can't do what they've always done and always thought of. So there's a massive education piece to go out. And I think we can do that through our advisors, but there's not that much around at the moment that's accessible enough to talk to a customer about. It's the same thing. It's, I think, all of these things. Certainly landlords, I think, must be aware, but I know advisors have spoken to landlords that weren't aware. So that's why I think if we can do something that can get the message out on where they are looking at their portfolio, and looking particularly, linking it through to your original remortgage question, there is that opportunity to start doing something different with that valuation. And it could be a small report to say, these are the areas that you need to look at, because these are key areas that would help to bring your property to where it needs to be. And maybe it's just something that the valuer can take as an extra paragraph on their valuation sheet to just include. Appreciate that. That's all cost in reviewing that, and it can't just be speculative. It needs to be perhaps a bit more in depth, but something that we need to do something to make sure that landlords are aware and are reviewing their portfolio and looking at what they need to do. The other option is, when it comes closer, they may decide that they want to sell these properties. And I think maybe future landlords might be looking at younger properties with better ratings. And so we could have a plethora of properties that need quite a lot of work. So I guess that could mean more property on the market, and maybe some developers might take that opportunity to refurbish those properties and bring them up to spec. So we could end up with some more first-time buyer properties that have been refurbished, but that would be still a first-time buyer option. So it's very difficult to see where the market is going to go, but there's quite a few options, I think, for landlords. But some might decide that the cost is going to be too much and they'd rather sell and look at investing in some newer properties or developing something that might not cost as much. So whatever happens, there may be a bright light on the other side. So it may be that more property may come onto the market, and if it's being developed and turned into the kind of homes that first-time buyers might like, that might become an event that happens as a result of this.
That's wonderful. Thank you, Sally. And Paul, what's your view?
Yeah, I would just add, there's quite a lot of risk in this. So, exactly as Sally said, you'll have some landlords that own Victorian Edwardian properties where they just decide this is just too difficult, and decide to sell up and refocus on, as you said, newer properties. Potentially the end result of that is we don't solve the problem. All we do is push that property into the resi market, which actually doesn't achieve a great deal. So I think the government's got to be careful of that one. And similarly, so the proposals have been going, again, Craig, may know more than I do on this one, but they've been going for at least a year, and haven't come to fruition, because I suspect it's difficult. And there does seem to be some rumours or discussions around moving the 25 deadline to 26, but let's say it's 26, that's still not very far away. And what happens if landlords start the process, but actually getting hold of the air source heat pump or somebody to install it becomes difficult and they don't hit the deadline? What have you got? You've got that property taken out of the private rental sector, at which point demand's not gone away. All you've got is extra pressure in terms of rent. So I think we've just got to be careful in this space. I think the other piece, and I completely reiterate where Sally was in terms of just advisors just keeping close to their clients and advising them and engaging them. It feels as if there's further to go in terms of the government position on some of this. So just watching out for new announcements. So there's the boiler upgrade scheme, and then which I think is £5,000, and that's coming in is it April? You've then got the home improvement scheme, which is for lower income households, which I think is 20,000. So there's a raft of new schemes coming through, which will impact on presumably residential clients as well as buy-to-let landlords. So just keeping close to those new initiatives and seeing how they influence what advice you're providing to your landlord clients is critical. One final point is clearly there's still a lot of the sort of 16, 17 spike in terms of 5-year deals that are coming through now. At which point, would you put your client onto another 5-year deal at this point in time, given all of the uncertainty around some of this? You at least need to have a discussion with your landlord.
And that's certainly will be a challenge for lenders. Is do you put a landlord onto a longer term fix who's got an E or an F rated when potentially that'll still be an E or an F rated you've got on your books in 5 or 10 years time when the laws have changed. So it's a really tricky one. I think the key thing for me is because I'd absolutely echo the concerns about you don't actually solve the problem, you just potentially move the problem if the tenanted property just becomes a residential property. You haven't made any contribution to the climate agenda, you just moved it. So that's a problem. And also just the private rented sector, we need landlords and we need these houses for people to rent, because owning houses isn't always the best solution for people. So I think the key thing for me is we just need to support landlords. And we're looking now, we're trying to plan, obviously we've got our eco mortgages, but if I'm a landlord, what's the path to green? What do I need to do over the next 3 or 4 years? How big a jump? Because potentially if you're on an F or a G, you can't make that jump. There's already rules that you're not supposed to be there for new tenancies. So how much of a jump is it feasible? Do people recycle so they end up buying a new build and they expand their portfolio into new properties or new build? It could be good opportunity for builders with the end of Help to Buy coming, because that becomes attractive. But I think we need to give, certainly as a lender, we're looking at what's the path to green for landlords and how do we help them do that over a 3-4 year. There's different innovative ways you could do things with different loans, etc., to try and say you've got a long-term lending need, which is your buy-to-let mortgage, but potentially you may have a short-term lending need as well to spend the £5,000-10,000 on this property. So they're the kind of things we're thinking about and analysing different products we've put together. But I think it's really important we support landlords.
Brilliant, thank you, Craig. And you mentioned there about the end of Help to Buy. So as the panelists will know, so after 10 years of supporting customers with the purchase of new build homes, the Help to Buy scheme is coming to its end next year in 2023. So I'm just curious, you've heard a little bit there from Craig about how that's impacting the market, but do you think the market is prepared for this change, or what can we expect to happen with a new build in the future? Paul, let me ask that one to you first, please.
First of all, it's a big gap to fill, isn't it? Was it 340,000 people have made use of Help to Buy, £29 billion worth of support. So it is a big gap, but I'm reasonably optimistic on this one, because I don't think almost at a country level we can afford not to be prepared and ready to just make sure that the new build volumes keep going. But the clock's ticking, and in terms of the long reservation times on new build, we really need to be in a position where the market's prepared for what quarter 3 this year-ish, if not possibly earlier. But I am optimistic. There's quite a lot of schemes out there, whether that be deposit unlock with Gallagher's, or the market mortgage, the first homes piece. They're all progressing, albeit relatively small at this point in time. You've got the government very focused on shared ownership, and the £8 billion worth of funding for the affordable home scheme. So I think there's quite a lot of initiatives out there. I was also pleased to see the Bank of England credit report for this quarter was released last week, and that talks to all of the lenders and gets their views in terms of lending. And an increased number of lenders said that they were willing to and expected to do more business at sub 10% deposit, higher LTVs. So I think that's encouraging. And if you look at pricing so far this year, overall it's been nudging upwards. 95% probably has been flat or or if anything, come down a bit. So I think all of those are positive signs. The other piece I'd raise would be a number of the house builders have issued their results over the last few days. A person came out last week, Taylor Wimpey's come out, and they're all pretty upbeat. They're talking a good game in terms of future completions, increasing their land bank. And whilst there's lots of comments about reparations for cladding, there's not a lot of comments about Help to Buy coming to an end, and or we're really worried about it. So yeah, I think they're quite positive. I think that's a good sign. But fundamentally, given the conversation we've just had about COP26 and the challenges of getting towards AB stroke C EPC rated properties, we can't afford not to be ready and prepared to continue to drive the new build market. But overall, feels quite positive to me, albeit there's further work to do over the next few months.
That's wonderful. Thank you, Paul. And Sally, what's your view on the end of Help to Buy?
Yes, I think we've been worrying about that for a while, and but I think of all the things that we've been talking about, it just says that new build is going to be more attractive, and for many reasons, and so there's going to be high demand. I don't know whether this might have become an opportunity for the high street, because certainly in many towns, small towns, and I can talk about Bournemouth and similar towns, they're looking pretty empty right now, and there needs to be some regeneration in towns, because I'm not sure how they're going to survive with so many empty places, and also it makes, and I'm not just talking about Bournemouth, I'm talking about many towns, particularly perhaps smaller towns that all have their own identity but are looking a bit empty. But there are a few smaller coffee shops, boutique shops, and some interesting shops that are slowly coming. But there's a huge amount of potential accommodation above those. And I think that there will possibly be regeneration plans coming at some point, which I would have thought include new build flats or new build houses. I think there's obviously, with town centres, you're hoping there's going to be a mixture, but it's very difficult to say the way the high street is going, with so many of the larger shops having exited. It's almost something to see that's going to happen in the future. We haven't really got that vision yet of what a town centre may look like that's lost a lot of that traffic. We don't know what shopping is going to be like beyond Amazon and everything online. I think it's, in a way, it's a lot to come, and it could be quite exciting if you see pictures of some of these other countries that have regenerated town centres and made them look incredible and very much more usable for people. There should be opportunities with that on the green side and on new build side, but I think that's a little way in the future, may not be 2022, but we have to be thinking about that future whilst we're making the most of 2022. I think certainly there's always going to be a hunger for new build, because it's going to have all of the latest heat pumps and all that would be required to make sure that you're meeting that green agenda. But as I said before, there is an opportunity to refurbish some of these older properties and bring them up to date. And that's where we come in, as you said, Paul, with the advisor looking at these properties with their clients and making them aware and taking them on this journey. So I think, and also I think new build is popular because if you're a first-time buyer, you're putting everything you have into this new property, and you want to be able to walk in and not have to do a massive amount of work on it, because you've got maximum mortgage quite often that you can afford, and you want to just move in. And so I think they will always be popular, and it's just finding ways to make sure that there's sufficient, and there has to be a bit more of an appetite for the type of homes, the modular homes, perhaps, to add to some of that, providing homes for youngsters. It's an ongoing saga. We have this question really, don't we, every year, and yet we still end up doing quite a lot of transactions for first-time buyers. And I think that you're right, all of those schemes that are all added together do help. And of course, I think with the demand, if there is huge demand, that often creates new schemes as well coming out. And I think that's what we may see. And people, don't forget, we have Bank of Mum and Dad is a very big part of their getting their children on the ladder. And that's quite an important thing to consider, because they are more likely, I would say now, today's 50s, 60s are more likely to look at wanting to do that now for their children, rather than going back a few years where that wasn't even spoken about and you waited until sadly they had gone. I think parents want to see their children flourish and want to make sure that they've given them that step up on that journey and enjoy watching them progress. So there will be help in that situation. And I think that's something that lenders do look at. And there's various schemes where parents can be involved and make it easier to help those first-time buyers get on the ladder. And they're quite important, I think.
That's brilliant. Thank you, Sally. And Craig, I know you've mentioned about Help to Buy already in a previous question, but anything on the new build front that you want to add?
Well, the only thing to say I think that's positive is I think the industry's already started to pivot. I mean, 65% of our new build sales 2 years ago were Help to Buy. That's now down to about 25%. So we've already kind of broadened how we do things and become a lot less reliant. We launched shared ownership a few months ago, and that's now up to about a quarter of what we do. So I think it's just understanding what's out there. And Paul reeled off lots of the schemes that are out there. So I think the challenge for brokers is just to help customers understand, because there is a lot of schemes. Yes, Help to Buy is going, but there's lots of smaller replacements. So it's just making sure you're up to speed with those replacements. I think the challenge is some of the replacements do the deposit challenge, so they might get up to 95%. Some of the replacements fix the affordability that Help to Buy was so good at, but there's not actually many of them that do both. So it's about understanding that. You know, we launched, I see you've got your flexi fixed for term banner behind you. So that's our long-term fixed range. That's great because that goes up to 90% on new build and goes up to 6 times income. So it doesn't get all the way to 95% LTV, but not too far off. So that's aimed at helping as well. But I think probably the key thing for brokers is just understanding that you've lost this big scheme and it's been replaced with lots of little schemes. So making sure you understand all the different schemes. But I do think it should be a good future, because actually some of the other things, I mean, Sally's spot on when we talked about green. New build's definitely part of the solution there, and especially for landlords, because if you're looking to buy another property to add in your portfolio, suddenly new build might be a lot more attractive for a landlord than it was previously. So I think what we'll see is the market's always been quite dynamic and quite reactive, and we've already seen that big drop in. You know, like I said, for us, it's only a quarter of our new build now. So I think the market will continue to adapt and pivot and find a solution. So we've always done it in the past. I can't see any reason why we wouldn't do it going forward.
Brilliant, thank you, Craig. Now we are quickly running out of time this morning, as with many of these things. So I will ask my penultimate question, which is mainly around product innovation. So we've seen lots of change, and we've seen customer needs and needs evolve from, like Sally mentioned earlier, from what they require from their property to, as Craig, you mentioned, longer term fix becoming potentially an option. But what do you think that the market still lacks? Sally, would you answer that one first?
Well, I'm going to go with my favourite subject, which is offset mortgages. And I don't think there's enough offset mortgages out there. And where people are wanting to improve their home and then they get so far and think we'd like to do a bit more, the flexibility with offset is, I feel, absolutely ideal for that kind of thing. They have always been thought of as the kind of mortgage that you would use in high interest rate environment, but I don't think that that is the case now. I think it's actually ideal in an environment where we have a relatively low interest rate and people are saving money and don't know what to do with it. And that would be youngsters, it would be parents, and I think an offset mortgage is the kind of product that all lenders should have, if I'm honest, because I think there is a place for that. And I understand that it's not talked about very much, although I think once you are a convert to offset mortgages, you probably would sell a lot more. And at one point they were very, 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 very popular. But I think it gives, the reason I think that they could be reinvented, I suppose. Everybody has a phone. They can look at anything on their phone at any time. They can swap money around. They can book cinema tickets. You can buy a car with your phone. There is nothing that you couldn't do online or on a, could be on a virtual call. And I changed my car last year and I didn't leave the house. Everything was done electronically. They brought the car for me to sit in and drive and then wiped it, sanitized it for them to get back in. It was the easiest purchase of a car I have ever done because I was renewing after the 3 years. It was seamless. I didn't need to leave my house other than to take the car on a test drive. So it seems odd that you can't manage your entire finances in a similar way. And I'm not saying it appeals to everybody. Some people might not want that flexibility, but it's the next best thing. If you wanted and you had money in your savings account and you want to use that to put an office in the garden, and you can't get it out, or you've got it under a 3-year locked-in special interest rate. If you had an offset mortgage, then you could just take that money out to do that. And then when you've got more savings and people are saving more, you can replace that, put lump sums back in, increase your monthly payments if things are going well. I appreciate it's a financial tool and you need to realize that. But I think that it could be reinvented to meet today's world, and if you like, upgraded in how it can be used. And certainly I think it could be a way of product innovation using something that fits with today's culture of being able to move things around, change things, take money out, put money in. It seems like it's the product for today.
Fantastic point, Sally. Thank you. And Paul, what do you think the market's still lacking?
So I'm going to agree with Sally in terms of offset. We track our volume of offset business within the network, and it's always disappointingly low. But that probably leads me into the market from a product perspective feels completely different from where we were 2 years ago. It's so much more dynamic, and you think about what's out there now. You've got lots more 95%. You've got long-term fixes. Thank you, Kensington. You've got joint borrower sole proprietor, you've got more parental support products, you've got green mortgages, you've got more seconds and bridging out there, more options in terms of credit impaired, more options for contractors, self-employed, complex income. There's an awful lot out there, and quite a lot of the products that you think that absolutely meets the need and should do really well don't end up doing anywhere near as much business as you think they're going to. So whilst innovation should always be encouraged, actually making the most of what we've got and working together between advisors as well as lenders to make sure everybody's au fait and familiar with the products and the criteria and submission, I think is critical. The other point I'd quickly make, Eloise, because I know we're very short on time now, is having more lenders and some of the bigger lenders in some of those categories is really helpful in terms of building credibility for the whole category. So probably shouldn't be mentioning other lenders, but Nationwide into Deposit Unlock, I think, is a good example of hopefully helping to open up some of those categories that otherwise maybe end up being a bit too niche.
Brilliant, thank you, Paul. And Craig, over to you.
Well, I can't really echo the demand for offsets, since it's very, very hard to fund as a securitized lender. But I totally believe the high street banks who are awash with cash should be doing more of that. I think Paul's right. There has been a lot more innovation in the last couple of years, but I just think we need, so the first thing is for brokers to make themselves aware of that innovation. But then I do think we need a lot more. I mean, the vast majority of customers are still on 2 or 5 year fixes. I mean, that can't always be the right answer. You know, the fact the markets, we're quite old fashioned, everything gets done in 5% LTV buckets. Is that right? Should it be right? It's been like that for ages. I think a rising rate environment, which we are undoubtedly in, should bring some different products, bearing in mind that's a very different market context to where we've been for the last sort of 10 years. So that should create some innovative products. And I think the key thing for me is, as an industry, certainly from a lender perspective, we need to think about customer groups rather than just LTV buckets. That's an 85 LTV person. You know, we did our Heroes mortgage, we've got the green mortgages, but we need to be looking at customer groupings and customer needs, I think, a lot more, rather than just lumping them into kind of different buckets. So I think, yeah, we just need more innovation, and the market context is quite different. I think for the next few years, that needs to bring different products to ones that we've relied on for the last 10 or 15 years.
Brilliant, thank you, Craig. And I suppose we've talked quite a lot this morning about opportunities and change within the marketplace. So with that in mind, let me ask you for a one-liner of what you think that brokers can do to maximise their potential within this year of 2022. So Paul, let me come to you first on that one.
I'm going to go in a direction you probably don't want me to go. Protection. So if you look at the numbers, look, I know we're talking about mortgages today, but if you look at what's happened in the last 12 months, we have seen a mortgage market that's rocketed. Numbers in terms of protection have absolutely flatlined. So the end result is we've got a proportion of new borrowers, or clients that we've helped over the last 12 months that we've not protected. So my hope is that in a slightly less frantic market in 2022, where advisors can maybe have more control in terms of their activity and get more control of their client engagement, that I think there's a phenomenal opportunity to go back to clients and revisit them on protection. For those of you who didn't see it, there was some data out from Amy last year, which was talking to clients as well as brokers. 97% of brokers said they spoke to their client about protection during the mortgage discussion. Okay, 36% of clients remembered talking to their broker during that discussion about protection. So there's something going wrong. So look yourself in the mirror, think about whether your protection engagement is as impactful and as memorable as it can be, and let's do the right thing and protect those clients.
Brilliant, thank you, Paul. And Sally?
I think in today's world, advisors need to be obsessed with their customer and look after them from start to finish. And we all know what happens in a year, a lot. And everybody's circumstances will have changed, certainly over the last 2 years, in many, many ways. And so to be an advisor with a customer coming back to you regularly, you have to be obsessed with looking after them. And regular reviews are the way to do that. And I think also, let's not forget the data that everybody has, the data that each firm might have on those customers. It's worth so much more if you're looking at it to see where the gaps are. And Paul, I absolutely agree with you. Looking back at the customers that they have done mortgages for and checking that they've got the right protection and that they had that conversation. There is a wealth of business in that back book that everybody, it's the biggest asset of an intermediary is their back book, because they've been doing a great job for years. But it's going back and looking after that book to make sure it's still worth something, because as you said, Paul, if they're not doing it, someone else might be taking that business for them, and you need to hold on to it. But it also gives a great opportunity to completely relook at the client's circumstances and make sure that they are set for what's to come. And I think that's something that's as important as taking on a new customer. It's holding on to them, but also making sure you're looking after them for their entire life, because that's what most advisors are hoping, that that customer is going to be a customer for life. And I'm sure they will be if you constantly look after them and, as I say, be obsessed with your customers.
I love that word. That's fantastic, Sally. Thank you. And Craig, last point from you.
I think the key thing for me is just to educate yourself. It's a great start because anybody who's watching this, who's taken the time to watch this webinar, thank you. And clearly trying to learn what's going on and what's happening in the market. So you've started to educate yourself, which is great. As we've talked about, the market's a lot more complex now than it was. There's a lot more complex solutions. I think there's a lot of complex needs through the pandemic, especially around groups like the self-employed, for instance. But all that complexity, which, let's face it, makes life difficult for brokers because there's a lot of solutions and a lot of work they need to do, is actually a great opportunity because customers can't help themselves. Very, very difficult. And customers more than ever, I think, need whole market advice rather than going direct to a lender because there's so many different solutions. So I think that's actually a great opportunity for brokers because your advice is more valuable now than it ever was. And customers really need help to navigate their way through that maze. So like I say, a bit more work, a bit more education, but actually it's a really good time to be a broker.
Brilliant. Well, thank you, everyone. That does bring us to the end of the questions. So hopefully that's provided some insight to our intermediaries who are watching today. But just wanted to say a huge thank you again to Sally and to Paul and, of course, Craig as well for joining us this morning and sharing their thoughts. So thank you.